What's up, everybody, and welcome to the special presentation. I'm hoping to be meeting a lot of new people. I have a regular audience, but I'm always on the lookout for some hungry new traders who love trading. I know there's a delay, so it'll take a second, but if you could hear my voice clearly, making sure the sound is good, sound check, screen is good, please say yes, and then we will be underway from there. Okay. And the other thing is, hey, Josh, how are you? You're not a new person. The other thing is there's a Fed announcement at 2. It's a little after 1 p.m. Eastern right now. I will have you out of here so that you can see how the market responds to the Fed announcement at 2 p.m. Okay? Because if you're an active trader, how many of you are active traders? I'm curious. If you're an active trader, then knowing about the Fed announcement is relative to what we're doing. Okay. All right, but I need more comments for me to feel alive and awake on one of these events. It's very important that I engage with the audience. So some people said hello, but I like you guys to chat. I like to make sure you're participating. To the extent that it's possible, I long for that trading community that I grew up with, where it was rows and rows of traders on a floor. Okay. All right. So how many of you on here, because I know it's a different audience, already trade options? If you already trade options, say yes or no. Well, no if you don't, yes if you do. Don't say no if you already trade options. Also, just for curious, can you guys see each other's comments or no? Okay, cool. No? Lou can? Mark can? Okay, great. All right, there we go. Nice. So it's a two-way conversation. That makes me happy. All right, awesome. All right, let's go. I'm going to take you through everything. So purpose of this call is that I'm being introduced to a new audience, which I love because I've been doing this for a long time. We have the same audience, but every once in a while we add to our community. And what we're looking for is motivated traders, people who don't do this for a hobby, but they want to make money in the market, which is nice. And so I'll give you my brief history because I think it's important you know I'm talking to. Then I'll go into the strategies that I use for trading, what I've been trading, and what comes next in the strategy going forward. And if you want to be a part of the group, that would be great. Okay, so the agenda is I'll go over the origin of my services, evolution of the industry, where we are now, what the future holds, and so forth. So I started trading in 1998. And let me just go forward. And I was having a lot of success early in my career. Nelson Schwartz from Fortune magazine came and he asked the owner of the firm who should watch trade. He said me, and he did this amazing article about my success. He watched me make $20,000 in a couple minutes, and he did follow-ups for 3 years that were all very, very flattering. I ended up on television. That was for a dating show. I didn't know it was a dating show. It's a long story. I'll tell you some other time. But I ended up on television. It was on NBC after Friends. A lot of people watched. And I ended up on The Tonight Show, and they were talking about my success as a trader, to which thousands of people wrote in asking for help in the stock market. And I started a newsletter to answer all those people, which evolved into a career. So it was very interesting journey. My job at the trading firm as a partner in the trading firm was to train new traders. And then when I used to train 25 people at a time, but when I had thousands writing in, I realized there was a void where there's a lot of people who have other careers, whether it be lawyer, doctor, engineer, dentist, so many different things, but they also want to trade and make money. And there was no one catering to them. And so that was the area I tried to fill, and I've done it for years. As I went through it, I started with day trading because that was my background, but then it went into swing trading, and for years it was stocks. And then when the options market got weekly options and became much more liquid, I started to teach people how to trade options. And it began with the idea of selling a put. And that's actually, ironically enough or not, it's the most recent trade we made. So I'm actually just going to go off screen right now just to really have some fun. And Patrick, hopefully I could add share screen. I'm just going to share my screen window, and then I'll go back. Can you guys see my trading screen right now, or do I have to hit something to make it go? There we go. So literally, rather than going through what selling a put is, I'm just going to explain it using literally the trade we just made for Mesh Prime last week that we closed half of today. So we had bought calls in this stock, and we sold them for a 200% and 300% return. We bought calls in PCT at 8. It ran all the way up to 15. But we were in it when it ran from 8 to 12 or 13, and we sold our calls for a nice profit. And then what we did was we sold a put underneath. And we sold the I just want to bring it up to make sure I get it right. I'm just looking. I track every trade in the portfolio tracker, and so I could see everything we're in and what we did. So I'm just looking to make sure I say the right trade that we sold. Let me see. One sec. Okay. So PCT. All right. So we sold. Okay, perfect. So we sold when it was at $12. We sold the August 15th 10 put for $1. So what that means, if you look at this order, is we clicked on this and we sold 6 of the August 15 10 puts for $1. And PCT kept going up. We were willing to own it at 10 because our cost basis would have been 9. So we bought options at 8. We rode them all the way up to 12, 13. We made 300%. We got out of it, and then we sold the 10 puts for $1. Well, PCT went up a little bit higher, and we closed half our position today for 50 cents. So we're currently up $300 in the trade. We have 3 left. If it goes to 0, we make $450. Otherwise, we would have owned it at half the price it's trading at now. Pretty good, right? You guys get that? You need me to explain it further? Do you understand what we did there, selling a put? See, it's fun. I could use all these real-time examples instead of going back and using like the origin story. But give me a yes if you understand this trade, or a no if you don't, because my goal is to explain it to you, and I really want you to understand what we're doing. How many of you have ever traded PCT, by the way? Yeah, I'll show you the portfolio. So we bought the $8 calls for $1. We sold them for $2.40 and then $3.50. So we crushed that trade, and we wanted to be involved, but it had just gone up 50%. So rather than buying calls again, we went and we sold a put underneath and saying, okay, if it comes back down, we'll get back in at the price we were just in. But if not, we make money, and we just made we're up $300 right now, pacing towards $450. And the only reason we're not going to make 600 is because I just took half off the table because we got such a good move, and it frees up buying power with 2 more months to go, which is a great trade. And it's nice when you could show your most recent trade as an example rather than going through the presentation. So I'm going to stop that screen. I'm going to go back to here. There we go. So that's what we did. And just for anyone who didn't follow it right there, it was the idea of selling a put means that you're collecting premium, meaning that we're putting on a trade with the chance of a 70 to 80% success rate, which means we become the house. And when you're the house always wins. Well, after we did that trade, people said, this is great. Okay. So Mark, only bought put. Selling a put is effectively called, no, selling a put is a bullish trade, but it's not the same thing as buying a call. And the reason for the difference is when you're selling a put, the most you can make is the premium you collected. When you buy a call, and by the way, you want time to expire because then the cost of the option goes down, which is favorable to you. If you buy a call, time is hurting you, but the more it goes up, the more you can make, and your upside is unlimited. So that's the difference. And that was really what you just asked, is what a lot of people asked me after we were selling puts. They're like, okay, I like that you can make money selling a put, but how do we get more of the upside? And that's where we introduced the diagonal calendar. And the diagonal calendar is where we buy a long-term option and then we sell like a call, and then we sell weekly calls against it. So in that sense, it's a bullish trade. You could do it bearish also, but you're buying a call, you're selling weekly calls above it. You're collecting premium every week, okay? But if you do it right, you still get the capital appreciation. And the reason why this trade works is because the amount you could collect on a weekly basis adds up to more than the cost of that initial long-term option. Weekly collections over a 3-month period will add up to more than the cost of a 3-month option. Does that make sense? Okay. So this is the diagonal spread, which the street says is their favorite trade of all time. And when you do this trade correctly, and this is what we're working on in our portfolio right now, if you collect enough premium in some of these trades, you can own your call at a zero cost basis, meaning the amount you collected is worth more than the amount you paid for the call, which means you risk nothing on the trade. And that's where we aspire to be. Okay. So a diagonal is made up of one long option and one short option with different months and different strikes. The characteristics are it's put on for a debit. It benefits from time passing. It benefits from increasing volatility. There's a defined amount of risk on the trade. Profit is realized on closing the trade. Your max gain is unlimited if you do it right and you take off the anchor. And your max loss, this is the best part actually, your max loss is always the initial debit, but it goes down every week with the premium that you collect. Okay? So essentially it's a synthetic covered call. You guys all know what a covered call is? I'll get into that too later if you don't, but just let me know. I like to know. And I like seeing the audience participation growing as we go. That means you like what I'm saying, I guess. That makes me happy. So what makes it so exciting? Number one, you're going to get confidence. The reason why you're going to get confidence with diagonal is because no matter what, you're winning on one side of the trade. If it goes up, you're winning on the long call. If it goes down, you're winning on the short call. You can't lose on both, but you can win on both. So you're going to be confident because you're experiencing a win. You're going to be disciplined because even if the trade goes against you, you're able to reduce your risk every week. So you're never going to make a panicked emotional decision and get out early. And because there's a premium collection component, you can collect money every week and get paid. Okay. Okay. So here's an example of MU when it was trading at 40. If we wanted to buy 100 shares of MU at 41.69, it would cost over $4,000. But if we want to buy the 40 call, it would cost $4.35. So to represent that same 100 shares would just be $435. And these calls are going out 100. This one's going out 64 days. Okay. And then so what we were going to do is we're going to sell weeklies going out a week for 70 cents. Okay. Now, we're not going to collect 70 cents every week. The amount we collect changes. Sometimes it's more, sometimes it's less. It's based on the volatility of the market. Okay. But let's do the math. If we could average 70 cents a week, let's look at this. If you could collect 70 cents a week on average for 9 weeks, sometimes more, sometimes less, that's 630. Okay. 630 times 100, because one contract equals 100 shares, is $630. The original cost of the long call is $435. So even if your long call expires worthless, even if the stock goes nowhere, you're still going to make a 44% return. Okay. If it goes higher, you could do even better. If it goes lower, obviously you could lose, but the amount you could lose goes down every week. So this is a very risk adverse strategy that people feel very, very comfortable with, because you could win if it goes up, or you could win if it just stays where it is and you collect premium every week. This is 44% with us factoring in the cost of the long call going to zero. We're saying we make no money on the call we bought. We just use that as like an apartment that we're renting out every week. It's like, in this case, it's like if you bought an apartment for $435,000 and you collected $630,000 worth of rent, even if the apartment went to zero, right, you're still making $180,000. Does that make sense? Okay. So it's forward, same thing. If we buy the long call and then we sell the weeklies. So in this case, again, we have it going to zero. We priced it as we collect 36 cents a week for 11 weeks. The long call goes to zero. We're still making 131%. Okay, so diagonal is a very, very popular strategy. I'll be honest. I think this slide's just included to show you that I'm normal and I appeared on a lot of financial shows and that you could believe in me. But I was on for the opening of the Bitcoin Futures Exchange. So that was fun with Maria Bartiromo. But I think this is just a credibility slide, which hopefully my logic provides me with more credibility than the slide does. Although we did trade Riot as a diagonal call and we rocked it like early on days, which was good. We're really good at finding stocks. Okay. So let me just make sure. Okay. Yeah. So Mark said, is there a formula for the premium you receive? Well, when we're collecting premium, we want to sell around the 30 or 20 delta. And when we're buying calls, and sometimes we do this as diagonal, sometimes we do them without, we're going to do that away from the 30 premium, opposite of the 30 premium. So the delta is what we use for the formula for buying and selling. Okay. Quick history evolution. So I started the company in 2006. I've been trading since 1998. And as I said, we went from day trading to swing trading to options trading. And with options trading, we went from selling puts to diagonals to just buying calls and puts to doing cover calls. And every time we introduced a new strategy, it was a new service. So we had all these different services: options money machine, options wealth machine, Phoenix. Literally, like, we were fulfilling so many different option strategies. So if you were someone who liked selling puts, you'd be in one service. If you like buying calls, you're in another. If you like covered calls, you're in another, right? And then in 2021, a big fintech firm came to me and said, you email over 1 million people every day. You have a great audience. We want to buy you. So I sold the business. As they say in The Godfather, they made me an offer I couldn't refuse. And for 4 years, I stayed on and helped them. And they weren't getting into options. So they said, hey, if you want your business, if you want to do the options business, take it. If you ever sell it again, give us some. We worked out a deal, but they gave me the business back because they weren't using the options part of it. And it was really interesting because I had done this business for 15 years, been trading for over 20. And I got my company back, but with a fresh start, it was like, okay, what would you do different? And the biggest thing that I wanted to do differently was I wanted to only have one service. Okay. I really only wanted to have one service. And the reason why I only wanted to have one service is because I never liked when I was in like people were in a credit spread service, but I wanted to just buy a call, right? So they wouldn't get that trade. I wanted one group where I can make whatever trade I want. And so the culmination of that, or not the culmination, but a perfect example is what we just did in PCT. Okay. So PCT, we started the trade by buying a call. If you were in our credit spread service, you're not getting that trade. If you were in our diagonal, you're not getting that trade. If you were in our cover call service, you weren't getting that trade. You had to be in our call buying service to get the PCT trade. And then we sold a put. So if you were in the call buying service, you're not getting the selling the put trade. Okay. But what I did when I started the company over is I said, I'm just going to have one service, right? One service where I do all my trades. Mesh Prime. Prime means one place for all the trades. And so everybody was able to buy a call with me in PCT and then make 200-300%. And then we were all able to sell a put because that's the natural order of a trade. So I am truly so happy right now because I'm doing exactly what I want to do. And my portfolio for all of you is performing better than it ever has. Give me a yes if that makes sense. Okay. So here's an example of another kind of trade we did. This was in Uber. We bought, when it was trading at 78, we bought the December 1975 calls and we sold the 83 calls for a $13 debit. We wanted to own Uber for the whole year. So we did this in February and we've sold calls against it. So our cost basis has gone down. Uber's now trading at 85. We're up over $1,000 in the trade on just 2 contracts and in a really good position to continue profiting from Uber. If it goes down, we're somewhat protected. If it goes up, great. But we're in a really good position in this trade. And so you see, we rolled the 85 trades and then we sold the 90. So we collected another 80 cents. So our cost basis on the trade keeps going down, which means our risk is going down. And because we moved the short calls up from 85 to 90, our reward potential goes up. Okay. This is a really good trade. Talk about finding good stocks. And when you could do anything, you do anything because this was a stock trade. We bought 200 shares of Qubits at $1.92. We sold 100 at $3.65, which we were psyched because we doubled our money, but that ended up being bad because now it's trading higher. But now we're short the 8 strikes and it's at 15. So we did really well. We made a couple $1,000 in Qubits. And we found the stock when it was at $1.92 before it went to 18. Do I have a percentage when you sell or wait for it to expire? You know, it's a combination of time versus return. So like in the PCT trade, we made 50% of our max profit potential within 5 days of a 2-month trade. So it just makes sense to take off half. It frees up buying power. And if you make that much that fast. So that wasn't really because it was the 50%. It was also because it happened so fast. Does that make sense? Okay. So Qubits was a great job. I'm sorry you've lost on it, Mark. Yeah, we've only won on it. I'm not sure you can feel that. We've only won on Qubits. And we've been in it for a long time. We got in early. SoFi, here's another one. In this one, we did a diagonal calendar. We bought the 10 calls. We sold the 1150. And we did really well in SoFi too. We did really well in the SoFi trade. And I could show you all the trades. Our track record is really good. But this is the PCT trade. So we bought 5 of the 8 calls for $1.10. We sold 4 for $2.40. Then we sold the rest for $3.40. And then we sold the puts. So some stats on our portfolio right now are, I just want to make sure this is right. Yeah. So let me see. Trades, account, dashboard. Here, let me see. Okay. So far, out of 36 trades, we've had 27 winners, 9 losing, but some of those are like going to be winners. So it's even better than that. And then we've been trading small amounts. There are people that trade bigger, so it's always up to you, but we want people to feel comfortable. So our average losing trade, if you lost with us, you'd lose $138. And our average winning trade is $274. But that's trading, you see 2 contracts, 4 contracts. If you go bigger, it's a lot more. But on a small number of contracts, that's risking like maybe $500 per trade. So we're making, we're losing less than 30%. We're making over 50% in that sense. Our equity curve is awesome. And we literally have made money. We haven't been down at all this year. Even when the Nasdaq got crushed earlier on, we were really positioned well because of the premium we collect and the dividends that we collect. So really proud of that fact. And pretty much I'll answer any questions you guys want. And Mark Paling, everyone who spoke up, I like that. What we're always looking for is new people in the community. I'm at a point in my life, I just want to be with good people. It's very interactive. We have hundreds of people on my call every week. And what we do is we run this one Mesh Prime portfolio, and we're constantly collecting dividends, collecting premium, putting on new trades. I'll show you everything we're currently in right now too. But what I want to do is invite new people to join today. And honestly, even if we got 10, 20 new people, I don't know how many people are on here. I can't even see. But it's great to add new people that are going to participate. And so it used to be that you would have Mesh Private Portfolio, the Phoenix Letter, Options Money Machine, Mesh Delta, and all these other things. And then we just made it to one service. And the original price was going to be $2,495. But to be competitive and get good people in, we've extended the program because the service is still not even, it's like maybe, when was our first trade? It's a little over a year old. So we're still extending this window where you could get in for the grandfathered price of $895 per year, which is great if you like trading and getting trades every week. It's $895 per year. And by the way, your cost will never go up to $24.95. So if you get in now at $895, you're grandfathered in. That's the max you'll ever pay per year. You'll never pay that $24.95 price. It's at adammeshlive.com/Mesh Prime. This comes with access to our virtual trading floor where we do all of our calls. I do multiple calls every week. It's a webinar where I share my screen. I show you what I'm trading. You get alerts via push notifications in the app, in addition to text and email, whatever you sign up for, and weekly trading. It's adammeshlive.com/Mesh Prime. And love for you to sign up for that right now. And I mean, I could try to, I knew the market was going to go negative. Yeah, I mean, I could try to let you know all the benefits of it and stuff like that. But the truth is, it's just wins and it's good trades. So performance better than any deal. So if you want to have a good trading experience where we do all different kinds of trades, we keep a portfolio, we collect dividends, we collect premium. I'm in one trade where we get anywhere from a 36 cents to a 94 cents dividend every month. So I was on a call today. Someone said they did 1,800 shares of the trade. They've collected this year $6,300 in dividends on that. Now we only recommended 400 shares. So, so we would have collected $1,500 in dividends or whatever the math is, not 6,000. But that's what I'm saying, where depending on your size, it's going to determine your experience. I suggest if you're new or intermediate that you start small, feel comfortable, and go from there. But it is adammeshlive.com/Mesh Prime. Okay. No, most of my trades are options, Mark. Um, I do buy stocks, but usually if we're buying a stock, it's going to be $30 or less, and we'll buy a couple hundred shares. So we're not running a multi-$100,000 portfolio. This should be considered for people with like anywhere like it's like a $10,000 to $50,000 portfolio. Does that make sense? $5,000 you wouldn't be able to do it probably. You can follow along and learn, but I don't know. But I think 10 to 50 is where people should be if they want to do this. If you have any questions, there's a number to call. And I think that's it. So, yeah, and I could go through and show you. Well, I'll go by your questions. Let me show you this. Tina said, any breaks for previous subscribers to your services? That you're getting that price. So when we had the move over price for members, Tina, that's why we discounted, because everyone was in other services. We were rolling them all into one. So it's essentially we're still honoring that price for right now. I don't know the formula they use, but there's like a certain level we have to get to of membership, and then the price goes up. And we're probably like 100 people away, and then the price will go up. So you're still getting that $895 price, and then it will go to, I believe, $24.95. Maybe they'll stop somewhere else along the way. But this is definitely, as you know, if you subscribe. By the way, if you subscribe to probably Options Money Machine, that was probably our most popular service. That by itself was $895. So now you're getting all of them for one. So I hope you think it's a good deal. And I certainly come to work every week trying to earn that business. Okay. Okay. What else? Although, I respond to Tina, I respond to the audience, and we've had Mark, and you. I'll tell you this. I'll give you, if you want to go through Josh, right? Josh is on this call, which I always appreciate. Josh, you could send him your info. He could give you each $100 off for just being. There's not enough people chatting today, and I'm all about the community. Like anywhere I go, I like a lot of people. So if you're on here and you're participating, like Mark, you could have $100 off to $795 for you. Tina, you know what? You're right. You asked. My wife always tells me to ask. Every time I go to buy something, she's like, ask if there's any deals. Ask if there's any. I'll give you $100 off too. So here's Josh. Reach out to Josh, and they'll give you each $100 off. Does that sound good? And anyone else who participates, listen, if you're on here and you're participating and you want to join, all you got to do is speak to Josh. So now, Mark, we owe you $100 because you just joined already. We're late, Mark. Sorry. Mark, I'll give you a credit to something. We owe you $100. We'll find a way. We'll bring it up. Trust me. You're great. Welcome to our community, Mark. I'm psyched to have you. You asked a lot of questions. You'll learn. You'll come on every week. You're going to enjoy what we do. This will be something where we under-promised and over-delivered. So I hope you're happy. Julie, all right. Yeah, just contact. Oh, Gavino's on here too. There you go. So reach out to the team. Do you guys know how to reach out? So I won't tell you to put your phone numbers in because Josh is kidding. Josh, why don't you put your email and phone number in, I guess, is the best way to do it. Kay, hey Kay, how you doing? You enjoying it? It is a great group. All right, so we got Julie, Kay, Tina, Mark, Dennis. There you go. Oh, Josh put his phone number. Okay. I think the easiest thing to do is email him with your phone number now. Gavino too. If you've spoken with Gavino's Gavino at adamesh.com. And that's fun. All right. So you guys are telling me we should have just priced it at $7.95, or then we would have had to make it $6.95. Let me know. I'm still learning. What else? How many trades you have? So we're constantly monitoring our positions. Like we'll roll, we'll collect premium. So like just right now, just to give you an indication, if I go to open trades, so it's going to sound like a lot. We have 13 open trades on, but we've been in some of these trades. 5 of them have been since last year. Like we're in one stock that we collect a dividend in every month. And so we've slowly built this over time. So you don't have to get in all of them at once. You could slowly build up. But like, we're in one stock that gives us a dividend every week. We collect 13 to 17 cents every week in this stock. We've lowered our cost basis from 19 to 11 already. And we will own it at 0 one day. So we're in certain positions, but they're just managed at this point. Like new trades, PCT, we put it on last week. We closed it this week. 2 weeks ago, we bought the calls. We closed it. APLD is a new trade. So every once in a while we have new trades. So like here, I'll just look at the, so far in June, new trades, there were 3, but we're updating old trades too. In May, we did 4 trades, but April, we only did 1 new trade because we're coming out of that rally with all the other stocks. I think the best thing I could tell you is though, like when the Qs were at 405 and the market was getting killed, we were up money and nobody was stressed. So I'm psyched at the way we perform. I like everything we're doing. And yeah, I encourage you all to join. You have the numbers and you have to chat on here. You can't just email Josh and Gavino directly to save that $100. I got to know you're here. I like participation. That's why I'm doing it. I swear, half the reason I still do this is I love my weekly group call. I like people that are chatting. It makes things grow faster. I'm looking for good people. And it's good for you too to chat and not be afraid to ask a question. But sounds like we got 5, 10 new people, which would be cool. I encourage you to reach out. And then other than that, let's go trade the Fed announcement. By the way, I just want to know, because just for my own edification, obviously we promote these events and stuff. Do you feel like we did what we said? I explained who I am, the strategies I use. You understand how I trade, what I do. Do you feel good about that? Dennis, I haven't looked at that. Argentina ETF. But I am going to Barcelona this summer, so there's that. All right, we all good? Thank you to everyone for being here. I appreciate you so much. There's the price. There's the number. We do what we do. Hope to get some good new people. And that's it. Be good. Talk to you later.